It's time now for Better Money with Joel Johnson. Today we're talking about the retirement impact of tax cuts. Joel is a certified financial planner and managing partner at Johnson Brunetti. Thank you so much for being here.
It's great to be here.
Tax cuts have certainly been in the news. It's on Donald Trump's agenda. Whether or not that all gets accomplished, we don't know.
Correct.
But you're going to talk to us about how tax cuts in general will impact retirement.
Right. We're going to try to break it down in real simple terms because there is something in the proposals for everyone.
So if the tax code changes, and that would lead to tax cuts under the current plan that they're trying to, standard deduction could be doubled.
Right, which is huge for lower income and middle income people. So this is not just proposals for the rich. This is absolutely huge, Kara. If you are married, you have a $12,000 standard deduction right now. The president and the Republican Congress's proposal is to double that.
Huh.
Okay?
Only for married people.
For singles it gets doubled too.
Okay.
So for singles it goes from about $6,000 to $12,000. For married it goes from $12,000 to $24,000.
That's a lot.
This is for people that don't itemize, but that's huge. I mean, you're saving thousands of dollars that you're going to keep in your pocket if this piece of it goes through. So there's something in this for everybody, and it's really big for lower income taxpayers. They might end up paying zero income tax on a $30,000 or $40,000 a year income.
How will this impact retirement?
So it'll be great for retirement because when we're in retirement, we tend to be able to control our taxes better because we can choose where we're taking our income from. So there will be retirees that were paying a few $1,000s in income taxes that on the same income now may be able to not pay anything. So it's going to be great for middle income retirees, this piece of the proposal.
But it could also mean fewer deductions.
It could mean fewer deductions. That's another part of it, which means we may not get deductions for the state taxes paid, for some of the real estate taxes we pay, the tuition credit, which is worth about $1,000 may be going away. So again, there's a lot of balance in this program, and we have to kind of look at it. First of all, we don't know, like you said, if it's going to go through. And secondly, what pieces would benefit us if it does go through? So for middle income people, they might lose some deductions, but that piece they pick up with the standard deduction is pretty big.
All right, and then let's talk about estate taxes.
So the proposal is to get rid of the estate tax altogether. Highly unlikely that that would happen. So we don't think the estate tax is going to completely go away. But that's the proposal. Now, for most people in Connecticut, we're hit more by the state income tax than the federal estate tax, the state estate tax than the federal estate tax. Now, who would this benefit? Well, if the estate tax actually goes away, it will benefit you if you're inheriting money, and it would also benefit you if you're trying to leave more money to your children.
Okay, so a lot to figure out because it depends on what Congress does.
It really does.
But here's some things of how it could be impacting you. And then you have an offer for us. It's your 2017 guide to maximizing retirement income, where you'll get into the nitty-gritty more about all of this.
Right, and where it all really starts is let's take control of what we know we can control, which is our retirement income, the way we're investing, maximizing Social Security, maximizing pensions, and we go over all that in the retirement income guide. So we want every one of our viewers to get this retirement income guide. It'll be helpful no matter what Congress does with the tax proposals.
To get it, just email Joel and his team at bettermoney@WFSB.com. They will send it to you for free. Thank you so much, Joel.
Thank you, Kara.
That's Better Money.